Good morning. Welcome back to Professional Insights. Imagine unlocking hidden funding opportunities that can propel your business to new heights. Today, we're going to dive into the wonderful world of business credit. And as the division president of Business Credit Advisory Group, Jeff Shada has helped countless business owners and entrepreneurs help their finances within their business and separate themselves from their business in terms of establishing business credit. And so whether you're just starting out as a startup or you're an established business, this conversation is for you. His expertise will equip you with the tools that you need to navigate some of these financial landscapes with confidence and ease. And so with all of that said, make sure to hit the like and subscribe button, and let's get started. Morning, Jeff.
Morning.
How you doing this morning?
Doing great. How are you?
I'm doing fantastic. So, Jeff, this is a big topic, business credit, that I think is very misunderstood. So, someone new, including me, to this topic, how would you explain the key difference of business credit?
Well, the big misnomer with business credit is it's not all the same, and we'll kind of cover that later on. But I would like to discern a little bit of difference for the average listener out there. What we think that we know about business credit is a real misnomer. What the banks, our traditional banks, call business credit is not really business credit. So commercial credit is what I want to help everybody understand what commercial credit is versus business credit. So we'll talk about that as we evolve here.
Okay, and why is it important to establish a business credit profile?
So a business credit profile, which many people don't really understand that they can even have one, is built around an EIN. And the EIN is your business tax ID. So if you have an entity that you've structured, it was awarded a tax ID by the IRS when you got going. And that is equivalent to our personal Social Security number for the business, though. And so to be able to build around that, just like we built our individual credit reports, a business owner can take a charge and actually build credit around that EIN number, just like they have around their Social Security number, except it's specifically for the business.
And the bureaus are different, though. So explain what the difference. Explain the bureaus between personal credit and business credit.
Yeah. So one of the things that we've got to cover is business credit is if you draw a line and say, here's business credit, and the other side, personal credit, they're not connected at all. So even though you're the owner of a business, your personal credit doesn't affect your EIN number, and your EIN credit doesn't affect your Social Security number. And it's kind of a broad topic to understand that, but delving into it, when we talk about the actual factor of business credit itself, exactly what was the question again, so I don't get off the subject?
So there's different bureaus for personal credit and the bureaus for business credit.
Yeah, so this is where it gets a little bit dicey. So there are actually 13 bureaus in the business credit world, the EIN world, but we're going to talk about 4 of them.
Okay.
So 4 of them you'll probably recognize, or you may recognize. Dun & Bradstreet is number 1, but the other 2 that I'm going to mention, Equifax, but it's Equifax for business, and Experian Small Business Systems. You recognize Equifax and Experian probably in your own credit report, but it's entirely different divisions run by different people, only for EIN business credit reporting. So what's important about that is those bureaus are run solely on the information that's put around an EIN number. Hopefully that's helpful. There's one other big one, and that's called Credit Safe out there. So that's the 4 major players out of those 13. The other ones revolve around checking accounts, other things like that, but those are the primaries.
And so with 13 of them, and you and I spoke about this before, and I definitely, obviously, a lot of people have heard of Dun & Bradstreet. Vaguely have heard about Equifax and Experian, and you mentioned about misnomers. What are some of the common myths and misconceptions that business owners have about establishing business credit?
So one of the problems we have is traditional banking allows us as business owners to think when we get, and I always kind of joke with people, and I show them my credit card, but you guys can't use it, okay? So this is a Chase Ink card.
Okay.
This is one, I have multiple businesses. That's one card that we use on one business for a very specific reason. But at the top of it, the point of this, at the top of it, it's got a business preferred account. Okay. The banks will call business cards, even though that traditional banks are using our social security numbers as a tool to give us something dubbed business credit. What does that mean? Well, they've printed business on that. Other than that, that's the only thing that it really relates to your business about. So when we talk about business credit, the misnomer is this. In general, in life, we're not taught any different. I went back to school age 57, got my MBA and kind of mastered in finance. And
Okay.
during those 2 years of knockdown, drag out 40-hour weeks, we never talked about business credit. We talked about how company profiles are developed in terms of Wall Street money, but we never talked about how individual credit profiles are built. So the misnomer is you can have business credit, which I'm going to equate to commercial credit. So we're going to establish that whether you're using a S corp, C corp, LLC, it doesn't matter what the instrument of your business is. It's all dubbed commercial credit, or sometimes what's connotated as corporate style credit.
Okay.
And that's a different style credit. So that's the big one to discern and come to the knowledge that you don't know what you don't know.
So are there particular industries or business types that see more benefit from going down this path of dedicated commercial line of credits or credit?
Actually, so let's go back to those bureaus. So and let's go back to credit profiles. Credit profiles, what a lot of business owners don't know is they are commercially available to anyone that wants to pay for them. So publicly available, different than our individual social security number. Anyone can go look at your personal, cannot look at your personal credit, but anyone can look at your business credit. So where they're highly valuable, regardless if you need the money or not, is people are making judgments on you. People, when I say in business all the time, vendors, people that might want to do business with you. Oftentimes, before I do business with someone, because I've got the access to it, I can pull a business credit report and says, who are these guys? It lists who you are, what your addresses are, what your SIC codes are. It lists a whole bunch of information about your company that you don't even realize is out there. So, in fact, this having a good business credit profile is really important, even to the extent that it controls what insurance rates that you get in your inside your business. So there's a really big, impactful thing to work on your business credit for any business.
Wow, there was a lot to that.
Yeah.
Is that why Dun& Bradstreet charges their monthly subscription fee?
Yes. Now you can do a number of different things. Dun& Bradstreet doesn't make their money collecting data. They make their money selling data. So the primary purpose of most of the business credit reports is to sell to people that need the information to make financial decisions. So you can imagine if you don't know what your business credit score even is, which most business owners don't on their EIN number, everybody knows their personal score, right? But how many business owners truly know what their official business score is? So that's one problem that we have in the US. But the bigger problem is what else is on that business credit report that people are looking at? It could be misinformation. And if you don't go out, and unfortunately in America, business credit reporting is still a wild west of business. And what I mean by that is it's not legislated. People that even lend in there don't have to even report one way or the other whether you're making payments or not. Now, the result of that is only about 10% of people that loan to business EINs even report data. But going back to what you said, and it's really important, Dun & Bradstreet is the number one reseller of information in the universe. And that's how they make their money.
And my understanding is that business credit is kind of a pass fail. It's not a graded scale like our personal
No,
credit.
that's inaccurate.
Okay.
So on a scale of 1 to 100, this is the simplest way to explain it. 1 to 100 being your speedometer dial. 80 to 100 is kind of what we shoot for as a perfect score. That's equivalent to us as individuals having a 750 to 850 FICO score.
Okay.
So on that scale, 0 to 100, you really can't get lending as an individual business until you hit at least 70. So there is a scale. It's designed differently in each of the different bureaus, but effectively they all kind of run off that same algorithm to this sliding scale. But it's different than our consumer reports for sure.
Okay. Now, when we spoke last week about this, on our personal credit, I mean, we understand kind of a little bit on how the credit score works. Now, there are some variations and some gray area to that. What does it take to establish that 80 to 100 score on a business?
The first thing is at least awareness. And I tell people all the time, and it really sounds weird, but to know that you don't know. And what I mean by that is this: until we are at least aware that there's a different system of tools out there that we've got possibility of using in our, in our business as business owners, we can't do anything about it. But in the business credit, to build your profile, it takes active participation in the business. As I said, it's still kind of the Wild West of business because there's no required reporting unless you intelligently go out and have a systematic approach to be able to build your business credit profile, and have something that actually is be able to control the data and make sure that the stuff out there is accurate. You won't ever hit a credit profile of anywhere near the 80 to 100. It doesn't happen by happenstance.
So, Jeff, there's thousands and thousands of businesses out there that survive every day.
Yep.
Why, like, really? I mean, and then you look, put another hat on a business owner having to manage this stuff on top of everything else.
Yep.
Outside of your service, why does anybody go down this path if it's so painful?
The challenge for business owners, and I've been in 28 different business vehicles in 42 years of my career, all the way from startups to Fortune 200 multi-billion-dollar companies. The one common thing in all of that was all of those businesses, based on scale, always were looking for money. And as a business owner myself, and having been in those different situations, there's always something more that you could do in terms of growth or cash flow management or anything else that happens through the nature of business that can be bettered by having a business credit report that you can now utilize. So going back to the fundamentals, by having established business credit and be able to utilize that inside your system, it allows you to now even out your business plan without having to go ask permission at a loan by loan time. So it's a permanent solution. So the exchange is this: spend a little bit of time. When I say a little bit of time, 3 to 5 hours a month to culture the right business credit report over a 6 to 12 month period. You can have a Fortune 500 style credit report profile by the end of that time period if you do it right. And once you've got that, now you have the tool, the leverage tool inside your business to utilize credit as you need. Now you still got to have an economic engine developing, your income and all that sort of stuff. But assuming that you've got that, you now have the tools to not have to go loan by loan and figure out how to get the next project done. You now have a host of, you got a whole tool shed to go to and say, hey, I've got the resources now because I know where I stand and I've developed the right tools to go out and get permanent solutions, whether that's big open lines of credit or whatever else, an individual business owner might need.
Yeah, I mean, well, there's a lot there, Jeff. So,
Yeah,
I mean,
it's a big subject. I don't know how
right,
we're going to do it in a half an hour.
and maybe we come back to it, right? And really, I appreciate you saying that, Jeff, because I mean, part of this is really just kind of planting that seed of somebody, right, to take them from I don't even know, I didn't know, to now that I know that I don't know. And if we can just kind of help progress somebody through that level of consciousness, then we've done our job, right?
Yep.
And so before we kind of went off that, I asked, like, what are there particular business types or industries that are better suited for this? Or is it just kind of across the board? Anybody can kind of get into this and establish their business credit?
So anyone can do it. Obviously, the more capital intensive your business is, whether that be inventory, equipment financing, there's a whole host of different types of finance available. But like, for instance, when I was in the construction industry and I needed a new backhoe and the backhoe was $100,000,
Right.
I could specifically go out and get a backhoe equipment loan, right? Because I had built business credit. Now, if I didn't have that credit, I'd have to figure out how am I going to get this piece of equipment. I've got to go, ask a bank, and a lot of banks don't do that. Blah blah blah. So the challenge is, depending on what your needs are, construction companies obviously are a big need if I was an Amazon reseller and I wanted to buy $30,000 or $40,000 of inventory? Either going to do it cash, or you're going to have to do it with some sort of credit line that you've established. And unfortunately, in America, what we're taught to do by the traditional banks, because of their risk model, not because banks are bad, but the risk model says we want your personal guarantee,
Right.
and we'll give, and based on your credit, we'll give you a credit card, or we'll do this, or we'll do that, and that's quote business credit. The challenge with that is it drags our personal credit score down. So we're trying to evolve our business. And I tell people like this. So I've got 5 children. My children are all adult children. And I love my children, but I will not sign personal guarantees for my children. I'll work with them. I'll loan them money. I'll help them. But what I won't do is sign a personal guarantee. And I tell my businesses the same thing.
Gotcha.
Businesses, you're on your own. I'm going to help you out. You're now an adult business, and you don't come to me for a personal guarantee on any loans, because I won't do it.
I mean, it makes sense. And so outside of that, Jeff, I mean, because look, we've talked to business owners that have multiple lines of credit, but they're all in their own name, right? And they're running different types of their business through their own business credit, right? And, whether it's American Express or Capital One or whatever the case is.
Yep.
And there's a lot of things why that is not the right way to do things. What other challenges do business owners face when trying to establish and maintain this type of strong credit profile?
Well, a couple different things. Obviously, to get your credit profile set up, it's going to take some time and effort. I tell people if you budget about 3 to 5 hours a month, it's manageable, right?
Okay.
Now, it doesn't happen overnight. There is no magic potion out there. There's not a magic wand. It just takes time, effort, in the business owner to either appoint someone that's specifically going to walk through this on a traditional basis, traditional being month in, month out, just like you do accounting, right? It's what I do is I tie, because I have multiple businesses, I tie the things that I need to do in my credit, my business credit building, together with my financial reports. So when my accounting gets done every month, I take the immediate time after that, several days, to do the things that I pre-plan, need to have done, budget and expenses, things that I know that are going to affect my credit report. I get those things done and out of the way. Just like accounting. I got to do accounting. I mean, a lot of people put that stuff off.
Right.
So if you're a putter offer, the system won't work for you. You've got to be very religious about, I've got to get this done month in, month out. Now, eventually, when you get your credit profile built, it's a maintenance diet, and it's maybe a couple hours a month. So the point is, if you don't have a CFO, or you're not big enough to have someone besides a bookkeeper, the owner's got to learn to do that on their own and force themselves through the right exercises. I call what we do, it's like a financial gym membership. You buy a membership, but if you don't go to the club and work out, nothing's going to change, right? Same thing with
Right.
building business credit. You've got to do the reps and the workouts, and that's going to continue for as long as you want to be, looking like a bodybuilder, right? So that's kind of your business credit profile.
So going into the gym is obviously the first step. You've got to go in to get the membership.
Yeah.
Right? So what are the initial steps for a business owner to start building their credit profile?
So like most of the things in the world today, almost all business pieces are data driven, right? So we know that there's 125 identified data points out there that lenders potentially are going to look at. So what I recommend to business owners is, number one, get excuse me, some counseling to go out and understand what those data points are. Some of them are very simple, like your website. But as an example, on your website needs to have a business phone number on it. So if you're working out of a residence or some sort of sleepy operation where you don't have a business phone, that's an immediate decline on any card that you want to try to get in an EIN name. Why? Because it's a risk model. They're not going to ask for personal guarantee. So if you don't, I tell people, I always talk about Walmart. If it doesn't look like Walmart, smell like Walmart, feel like Walmart, taste like Walmart, and resemble Walmart, you're not going to get business lending. So on a smaller digital scale, what we try to help people do is understand the 125 data points, help the business owner orient to getting those done and out there in the ether space of business credit reporting. Once that's done, that's the first step of the accomplishment. Then you move on through 7 other steps that we've built as a traditional path, step by step, to build it. So going back, the first thing would be to understand what those discoverable points are and work on those points for a business owner to get those accomplished.
Interesting. And then for those that are hesitant, right, that are just for whatever reason, right? People sometimes live in fear. But
Yep.
for those entrepreneurs who are hesitant about diving into building their credit profile, what advice would you give them?
Well, 2 things. You can't stick your head in the sand. If you're listening to this, you now know that you don't know. Okay.
Right.
And that's okay. And most people, I mean, 99% of the people that I talk to, and I've talked to thousands of people in all sorts of different walks and shapes of life, don't know about business credit. So don't feel bad, number one. But understand this. If you don't, as a business owner, if you don't take control of it, it will continue to control you.
Hmm.
So not having good business credit even affects, like I said before, your insurance rates. So you're paying artificially higher insurance if you don't have a good business credit profile. Even if you didn't need the money for just that purpose, you should go out and do it. And if you ever look for government contracts or anything related to someone that's going to look at your business credit report, if it's non-existent or very low, you probably are not going to get the business contract. And it doesn't mean you're
Uh,
bad. It's just because the data is not out there sufficient. If you go look for me and I'm trying to tell you who I am and you can't find any data on me, well, what's going to be your conclusion? Well, that I'm either lying or I don't exist, right? So
right.
that's a challenge.
Right. So it can be or could be a differentiator between you and a competitor when going after those contracts.
Yeah, like I say, when I'm doing business with someone, especially if it's going to be a long-term relationship, one of the first things I do now is pull their business credit report because it's available to me. And I look, are they say who they said they were? How long have they been in business? Do they have any deficiencies? Have they not paid their bills? Have they paid their bills? So those are some of the judgments that I'm making on businesses, and they don't know that I'm doing it, but it's a good, smart thing to do when you understand how business credit works. Maybe you're going to offer a contractor 90 days to finish a job, but you're going to give him some money up front. It could be that simple. It's like, well, look and see how he pays the bills, or does he pay his bills? But if he's late on everything, guess what? You make him 10 grand to get that job started, and he'll disappear, never pay, never do his job.
Which Jeff has happened a lot, right? So
Yeah.
how do I, unknowing, kind of unknowing in terms of this world, how do I go online and look up a vendor that I'm going to use in a situation like that? Be it a contractor, or if I own a business, somebody that's going to do my laundry services. Like, where do I go to look up that information?
So most people have to go to a provider, being a Dun& Bradstreet, someone like that,
Okay.
and then you have to pay for the report. An individual business credit report runs anywhere from, I've seen as low as $79, as high as almost $180 to
Wow.
pull one report. So, for instance, I'm in the business, obviously, so we subscribe to an annual contract that we have an unlimited number of polls, but it's very expensive, to
Right.
maintain that. So either, counsel with someone like myself that's in the know, or if it's a big enough contract or big enough issue, then just pay to go to like one of the bureaus and try to pull, someone's report. It's not easy to do, and that's by design. Banks don't want us to know that there's an alternative to their system, so it's predicated on the fact that the business credit system is not very well known, and so that's one of my missions in life, is to bring that to business owners' attention, that there's a whole nother world out. And I call it the tale of two worlds: the tale of our personal credit world and what the banks want us to know, and the tale of the real EIN or commercial credit world and what they don't want you to know, but we're willing to reveal.
Wow. So looking ahead, how do you think the landscape of business credit will evolve in the coming year and the years to come?
So I'm gonna point back to my career, and like I said, I'm an old guy, right? So back in the '90s, I helped grow a mortgage bank company from a regional company to a national company. We were doing over $1 billion a year in funding. Keeping in mind, this is back in the '90s
Yeah.
dollars. There was a lot more loans to be done for $1 billion. But the fact is this: during that time, I was one of our head senior underwriters, and I had all the credentials. And we manually, when we started that business, we would a human person would make all the decision and have to follow these set of guidelines that were established, right? By the end of 99, FICO scores came out, and FICO scores became a modeling, and everything ran through computers. And then it was to the point where by then you had to run a computer profile. The human would look at it and agree with it or disagree with it. Human could still underwrite it. By the year 2000, 2001, if you didn't have the computer say, yes, you could do it, you couldn't do the loan. So FICO drove that model. FICO now controls us as human beings because it controls all the scoring models in all the banks across the world. There's a new model coming out called the SBSS model. It's the small business system. Let's see, small business. I can't even remember what it's called right now, but for small businesses. And FICO's pushing that model into the EIN realm. And what's happening on that, there's consolidation going on with a lot of lenders and things like that. So my fear in my common knowledge is that it's eventually going to take over the business side, the EIN side, or commercial credit, because it's an easier model to work on. So that's how it's going to evolve. But here's the FICO model on that side. 1/3 of it is based on your personal score as a business owner. The other 2/3 is built on your business credit score. It's a 0 to 300 model. And if you don't score at least 165, you are not getting a loan on it. So here's the thing. If I've got perfect business credit and I can score, let's say, 190 out of 200 points, I've already accomplished, even if I got poor personal credit, I've already accomplished what I need to do on that scoring. So our modeling says that if you build a strong business credit profile, like a Fortune 500 style credit, you'll still will succeed in the world if that comes in. And it will come in. It's infiltrating as we speak. And my guess within the end of the decade, it will be the prevalent scoring model.
See, Jeff, this is why we do these interviews, to ask professionals like you, what is coming next? What do we need to be aware of? That, like you said, most of us, including me, that I'm in the financial services industry, I'm not aware of. So I appreciate you sharing that. Finally, Jeff, what is one key takeaway that you'd want the audience to remember about this conversation?
Figure out how to move forward on it. Whether it's with myself or another professional out there, it's an unlicensed field, unfortunately. So look at people's credentials if you're going to talk to someone about it. Don't YouTube it. There's a lot of misinformation out there. Really dive into it and get a handle on at least understanding it. And then, take it one step at a time, because we know that everybody's busy out there. Right. And it's one more thing to add to your quiver. But the fact is, we've got a fairly good system that works, and we have guaranteed results in what I do. So,
well, Jeff, I appreciate the time. For anybody that's looking to establish their business credit, I'll have Jeff's contact information, website below. Please reach out to us with any questions. Reach out to Jeff. Leave your comments if you have questions. We'll get to them. Like and subscribe. We're here every Tuesday. Jeff, thank you for your time. I really appreciate it.
You bet. Thanks for having me.